Hey everyone, good afternoon, good evening, good morning, wherever you are in the world. Anyway, this is James coming to you from Dividend Stock Talk, where we talk about dividend stocks and more specifically investing in investing in dividend stocks for weekly and monthly cash flow. Now, why do we use just dividend stocks and dividend stocks only? Well, I like that the company shares the profits with me. I make the investment. Every 90 days, I get a little check if I didn't invest it. Let me back up and let me rephrase that. First of all, it is 8 o'clock Tuesday, September 12th, 2017. We're going to jump into our investing in just a second. I wanted to explain that more to you in a little bit. And you know what? I got that old time thing coming in. I forget where I was. All right, well, we invest in dividend stocks and dividend stocks only because we like the fact that the company pays us a portion of the profits and we get to reinvest. Now, I don't hold on to a stock for a long period of time. I like to buy it, collect a dividend, sell it. Okay? Now, I don't just sell it at a loss, I sell it for a profit. Small profit just to cover the costs of doing business. Now, that being said, I didn't do that this week. Well, last week. Last week, I sold an in-the-money option at, I forget what the price was. But anyway, I got called out of Colgate-Palmolive. I took a small loss on the stock. However, the premium I collected for taking that small loss on the stock added to all the other money that I collected. Oh, since I held on to it, or since I bought it. Now, we bought it back in July, the beginning of July 1st, as a matter of fact. And then every week, because we missed our target price the first week that we had it. So we started selling covered calls. From the day we owned it, covered call, covered call, covered call, covered call. And it was an awesome stock to do a covered call against. Because I brought in anywhere between 1 and 2% of return per week just doing the covered calls on Colgate-Palmolive. It was most cool. And I got to collect the dividend, which was good. And being on margin, I got to collect twice the dividend. So my return for the dividend was 2.5%, which was not bad because of that, what do you call that? Oh yeah, because of the option money, the margin money. Because the margin money allowed me to double my efforts. Now, I don't suggest you guys using margin money because it can be very risky if you don't know what you're doing, you don't plan your trades, trade your plan, and stick to your guns. Also, you have to make sure the market doesn't dump. Once the market dumps, you lose more money when you have margin than you don't. But we don't like to be in a stock for any period of time. We don't mind holding on to a stock to collect the dividends. We like to write covered calls on the dividend stocks. And we just like to collect money. So, hey, what am I doing here still? Let's jump on in and see what's going on. Today was an active day. I actually did quite a bit of trading today. Well, not really today, but I put a bunch of orders in last night because Friday we got called out of the position of Colgate-Palmolive. Let me quickly bring it up and I'll show you what we actually did with Colgate-Palmolive. Colgate-Palmolive, we were a negative 3,600. Now we're a negative 1,900. Now it may look bad from right here, but I bought the stock at 84. I think it was 84 or 74. Hold on a second. $74, yeah. July 1st. Okay, let's go back to July 1st. Okay. Now the reason we bought it July 1st is that we were under the impression. Hold on a second. Let's see everything so I can go talk eloquently about it. Okay, Colgate-Palmolive. It started out the year at 71, 72, peaked up a little bit, hit 74, dropped back down to make it dropped down to a trading range of 66, traded there for a couple of months, even made all-time low of the year, all-time low for the year at 63. Once she hits that 63, she jumps up to 68, and then she gaps up, jumps up nice to a trading range of 73, 74, right back where we started again. Drops back down, tests the water at 70, you know, makes a nice little test there. As you can see, here's a trading range here between 75 and 70 and 75. And she just dropped down here for a couple of months for some strange reason. So anyway, back to what we were saying. She made an all-time high right around June, beginning of June. And then slowly from the high of the year at 77, slowly descended down to it tried to make a trading range back at 72, 73, that area, which is where I got it. I got it right as she was falling, okay? I bought it down here at 74, July 1st, right there's where I got mine. Now you look at it as no trading day in July 1st. No, that's because I bought it on a Saturday because I got assigned the stock because of the spread that I bought. Bought a spread, bought one leg out, and then I got put to the stock. So anyway, I bought the stock on July 1st. Let me quickly go to the calendar. August, July. Okay, so July 1st. The option that I bought was the 74 and a half. I believe it was a call spread. Anyway, I didn't hit my target. So on Friday, instead of losing money, I decided to buy that back and actually take possession of the shares of stock. So what did I do first thing Monday morning, July 3rd? I sold the option. Where are we? July 3rd. July 3rd, when Monday opened up, I decided to, see, this is going to get us confused. Yeah, that's that. Let me bring my calendar back up again. Come Monday, which is July 3rd, we got to sell the 74 call spread for that week. And 74 is, July 1st is right about here. So right here is the week of July 3rd, 4th, 5th, blah, blah, blah. Okay, so we sold the 74. We didn't get called out, but I did collect, 2% for a, I think it was 2.5%. A 2.5% premium on the option. So here I bought the stock at 74, sold the option for someone to buy it from me at 74, the exact same price I bought, and I got I think it was like $2,600, which is a little over 2% of the holding that I had on that one. Okay, so that week passes, okay, and I didn't get called out. It didn't hit 74 again. So what happened on the 10th? I turned around and sold the exact same call option because it had weekly options, and I was able to do this every single week. So I sold that one, and I bought in another $2,000, which was another close to 2%. And it still didn't get called out. So what happens the third week I own it? Yes, you guessed it. I sold another option for someone to buy it from me, and I got to collect the dividends. Okay, so I got 26 here, 2,600 here, 2,200 here. Then I got 2,600 on the dividends, 2,400 on the dividends, and then another 1,500 or 1,800 for the covered call that I sold. Okay, come Friday, still didn't get 74, didn't get called out. So what happened on the 24th? I did it again, brought in this time I think of 1,200. All right. So I bought 1,200 for this week. Sorry about that. 1,200 for this week. Didn't get called out. And here I am on week number 5 of holding Colgate-Palmolive. And I sold another option. So you get 2,600, 24, 30, because it was, all right, wait a second. Oh, something in my eye. I hate when that happens. All right, so the first week is 2,600. Second week was 2,400. Third week we got the dividends, which was 2,600, and we got to collect another 2,000 for the covered call that I sold. So now we're up at 20, wow, 24, 26, 4,000, 5,000, 6,000, 7,000, 8,000, 9,000. And then the fourth week was another 2,000, so that's 14,000 we brought in. And then the fifth week, which brings us into the first week of August, we brought in another 1,400. Then we brought in 1,100, and we brought in another 1,200, and then we brought. We didn't get anything this week because we sold a 2-week spread. Brought in another 1,200. Okay, and then that brings us into August. Yeah, into September. Okay, and then we sold an in the money spread this time for $82.50. So actually we dropped the selling price because we wanted to be done and over with it. I don't know why, because we brought in over $12,000 just in premiums on that one, which is 12% just in the premiums. And that is not showing. Oh, wait a second. Yeah. So here on the 4th, which was last week, we sold a very hefty in the money spread and collected, I believe it was like 3,500, which really cut down the loss. So the loss that we supposedly had is what it says here on the account statement. I'm rambling on. Some of you might not even be interested in this, but I want to explain it because when I look at it later on, I'll be able to understand it. Here, where it says I'm $1,900 in the negative, that's only on the stock price. That doesn't count the dividends I collected and all the premiums from the weekly credit, no, the weekly call options. But what should they call that darn thing? Covered call. I got so much stuff going on in my head. It's just hard to blurt it out. Okay, so I brought in over $12,000 in the covered calls, and another $2,600 just for the dividend. Now, all that money does not offset the loss of the stock when you sell the stock for a loss. Because we bought the stock at 74, we sold it at, I believe, at 72.5. So we only took like $1.50 loss on the stock. Okay? So it's really not that much. Then you add it all in, we're actually in the positive. So this is kind of like a misreading, you know? Because if I could add the option money to the Colgate, I'm sure you'd definitely offset this hugely. Okay, that being said, let's get into what we did today. Okay. I will look at activity and positions. Okay, like I said, today was a busy day. We did some trades last night. If you want to watch you find out why we did those, you can take a look at them and see what we did and why we did it. All right, we did how many trades today? 1, 2 that got filled and 3 that got canceled, because they were day orders. So I put my order in, it comes out as a day order. So if it doesn't get filled, now this one I don't understand. This one makes no sense whatsoever. Okay, you put an order in at the market, you should be filled at the market instantaneously. Now, if I wanted to find out, it tells you when it expired. It doesn't tell you when I put the order in. So I put the order in, and it got edited out. Don't know why the market maker didn't do that. I'd probably call and bitch and moan if I had the desire to. Oh my goodness! Oh, it's still early, and anyway. Let's get back to see where we are. MDLZ, we actually bought that one at 37. Great. DE, which is John Deere, we got that at 72. Okay, and both of these we're looking to make between over 30% return for the week. That's not, 30% sounds like a lot of money, but 30% on a very small amount of money is really not that much, because when you're doing options, you get a huge amount of leverage. Okay, so you may have a couple 100,000 sit in your account, and you're buying 50 contracts, but it's only costing you around $4,000 to do 50 contracts. It's like if you do more than 50 contracts, hey, God bless you, but 50 contracts, if it goes the opposite direction of which way you want it to go, you're stuck buying all those shares or losing all that money, whichever. Now, I don't like to lose money, so on Fridays, if I have a position that I have to keep my eye on, I will buy out one of the legs in order to not lose money. Anyway, that being said, this is where we are. We missed out on GS, which I believe is Goldman Sachs, and then AGU, which I don't really know who they are. But we did get MDLZ and John Deere. Okay, so that's a good thing. We have a whole bunch of money left, so let's see what other kind of fun we can have. Now, we look at 10 days ahead of time, and tomorrow is Wednesday, so we want to look at Wednesdays and Thursdays. Now, we already looked at all of Wednesdays the other day, and nothing really tickled my fancy. Okay, remember last night we took a look at these. These two right here on the bottom are already out to pasture. We can't do anything with them. But MDLZ, we bought that one. CY didn't look good because numbers didn't look right. CM didn't look good because those numbers didn't look right. And CIM, they didn't look right either. So then we jumped up to Thursday's list. Now, considering there's so many on Thursday's list, what I decided to do is just do those companies that have weekly options, only because the options are priced differently than a 30-day option for some strange reason. Because when you're coming down to the last 5 days of the option, you can put them side by side, and still the weekly option has more value or a higher rate of return than the monthly option. And I don't know why that isn't, but hey, it is what it is, and I'm not trying to figure it out. Okay, so we looked at these last night, and we looked at AGNC, we looked at AGU, AMT, that MDT. I'm pretty sure we did not take a look at. That's Medtronic. So let's take a quick look at Medtronic, see what they look like. MDT. Let's check them out. Medtronic starts the year off at 85, travels about a month, and that trading range drops down to a trading range of 82, 81, 82, that area. It travels there for a month and a half, drops down, finds a range of 72 for about 2 months, finds a low at 69. Okay, it takes about 2 months for it to get up to the trading range, back up to the 81, 82 area. And then she tests that high again, so she makes the high of the year at 89.64. But you can see the trading range is between 80 and 88. It's like a 10% move. So we are looking at this space right here where we are. And it actually looks pretty good. It looks like it could be a very good investment. So let's see what kind of trades we can do on MDT. MDT. There we go. All right, MDT is sitting at 82.30, which means we're going to want to look at the 82s, which is right here. 81.5, 82s, 39. It gives me 11 cents for 3 days. Okay, now when I say 11 cents for 3 days, this option is going to expire this Friday. So I get 3 days, okay, for this stock to do what I want it to do. And what is that? I want it to do absolutely nothing. If it stayed exactly where it is right now to Friday, I'd be a happy camper. But who's to say it's going to do that? So with that being said, let's see what the seasonality looks like on this stock, because the chart looked good. Now, the seasonality may not mean anything to you. Interesting. What did I just do? All right, the seasonality chart may not mean anything to you, but let me explain why it's important to me. The blue line represents the stock price this year. The red line represents 10 years average of stock movement. That means January 1st, they take 10 years of stock average and they figure out what was this year, last year, the year before, for 10 years. And it gives you the 10-year average. So it gives me an idea of, based on historical performance, what the stock did yesterday, what might it do more favorably tomorrow than by me not knowing that information. Okay, that being said, let's actually see what it looks like. So the seasonality for this one for the next couple of weeks should be just what we like. Sideways, going nowhere. Okay, see, we're here Wednesday, the 12th. 13th, 14th, 15th is the end of the week, which should be right there. So if it goes on the path of the average of the last 10 years, this thing should go sideways or up. Not a huge amount, as you can see. It's not that huge of a movement that it makes on average, which is fine, which is exactly what I wanted it to do. And if it does exactly what I want it to do, what are we going to make off this position? That is a good 25% trade. So you can make 25% on this stock position or this particular trade if the stock does absolutely nothing. Okay, you see, now that's 50 contracts. All right, now 50 contracts, if it goes the wrong way, end up buying it. That's 5,000 shares I want to end up buying. Okay, now 5,000 shares at $80 a piece, even on margin, that's still a large chunk of change that I really don't want to have to do. So the profit that I'm looking at may not be, may sound great, right? $550 off of a $2,000 position. It's 25%. So ask yourself, why don't I sell more contracts? Yeah, but always, all right, don't get me wrong. I love the idea of 25%. It's only $550, which is a real bummer. I would prefer it to be a larger amount. However, you cannot, all right, you can do whatever you want. I will not put myself into a position where I lose because the stock goes the wrong way. If this stock here goes the wrong way and I only have 50 contracts, yeah, I can buy the 5,000 shares. But if I did 100 contracts or 200 contracts to make a larger amount of money or a larger return, I would not be able to fill that bill, because 100 contracts is like 100,000 shares, because it's 100 shares per contract, and 100 contracts is 100,000 shares. Sorry, I'm not in that ballpark yet. I can't play that big of a game. My game is, under 100,000. So that being said, oh, wait a second, I did want to do that one. Okay, we are going to get into this position. We're going to buy the 50 contracts, the vertical MDT 100, 100, the 15th of September of 2017. Now the position I'm buying is the 81.50, 82 call, 39 cents or better, just to open that position. That's the order I'm putting in now. It's costing me $2,026. The most I can make off of it is $550. and my break-even point is 81.89. So that's, less than 82. Okay, let's get back to the style. Oh, I can't get back to that while this is open. All right, the stock right now is at 82.30. Okay, my break-even is 81.89. Okay, so anything over 81.89 is going to be a profit. So if this stock goes up, I make my 25%. If this stock goes sideways, basically doesn't go anywhere, I make my 25%. The stock can even go down just a little bit, and I'd still make money. If it closes above 82, I'll make my 25%. I can go all the way down to the break-even point, which is 81.89. That's my break-even. So I make money if the stock goes up, I make money if the stock stays the same, and I make money if the stock goes down. How can you go wrong? But it can only go down a little bit. Not a huge amount, just a little bit. So I like that position, and let's send it. And come on. It's not sending. Here we go. Send that position. Okay, so that position is being sent. Let's get this back to standard, and let's see if we can find another one. This is where my buy signal is right here. That's where my break even is. Gotta love that one. All right, so we liked MDT. Let's look at potash. All right, potash starts out the year at 17, quickly drops down to 16, trades about 2.5 months at the 16 area, jumps back up to the 17, crawls its way to 18.5, and it trades in that trading range for about 3 or 4 months, and then over a 2.5 month period, she slowly gets away back down to that $16 trading range, trades there for a while, jumps back up to that 17.5 area, which is where she is now at 18.22. Now today wasn't a great up day, but she's got the dividend coming up in 10 days, and it's always favorable in the software. The software always says potash is a great company to get into. So that being said, let's see what kind of money potash is offering us if we decide to do that credit spread. It's not really potash, so I don't know why I say it that way. It's not that potash is giving us the money, it's the market maker who makes the numbers on what we're doing. Okay, so 18.22, so we would be looking at the 17.5, 18 spread. 17.5, 18 spread at 49 cents. Okay, now the market maker may not have this price quite right, but there's 3 days left. There's a lot of money in that position. However, it's not worth, to me, it's not worth more than 40 cents. Now I could change this number here by 50 contracts, or at least put the order in for 50 contracts at 40 cents per share. Okay, that way there's, hey, I like the numbers, I would like to buy it only if it could be 40 cents. He may take it, he may not take it. Let's find out. Oh, before we do that, all right, my break even is $17.90. The maximum profit is $500. Maximum loss is $2,000. So I'm putting up $2,000 to make $500, and that anyone can plainly see that's 25% return for 3 days. What has to happen? The stock has to go up, make money, stay the same, make money, even got a little bit of a leeway to go down, and it still make money on that one. But I'm changing the limit order to 40 cents because I only want to pay 40 cents. That's all it's worth to me. You know, the market maker wants 49, and I said, oh, I ain't paying 49. I want to pay 40. rather pay less, but I'm trying to be realistic. Okay, potash was okay. Now today's Tuesday, so you got 3 more. I'm going to take a look at those 3 tomorrow night. That'd be get to come back. Okay, so now I got those 3 to look at tomorrow night, and then Thursday we're going to look at CAH, which is Cardinal Health. And you know what? Come Thursday, yeah, tomorrow night, I just might look at, all the positions and see how well they're going to do. Anyway, let's see if we have any questions. I love questions. No questions. Come on, guys. Got to give me something here. All right. That being said, no questions. This is James from Dividend Stock Talk, where we like to invest for weekly and monthly cash flow. All right. All that being said, I am out of here. Catch you guys tomorrow, and you have a great night.